I've successfully held 80 different credit card products in the past 10 years. I'm going to share how I've done this without ruining my credit score by sharing the 10 rules I use in my personal finances. Definitely grab your notebooks, but first, I'm Key, a credit card points and miles enthusiast and travel lover. On my channel, I discuss the mistakes I've made, my future travel goals, and overall credit journey since 2016. Be sure to subscribe to my channel if you haven't already. Rule 1, stay organized. You don't have to be fancy at first. You can grab a notebook and a pen and just, when we're thinking about credit cards, write down the credit card name, when you applied for the card, any annual fees if that's applicable, the statement due date, and the statement close date. Any other information is bonus at that point. Just write it down. Perhaps you consider jotting down all of your expenses that you're paying on an annual basis as well. If you've never gotten a credit card before, I would personally start in your own backyard. Maybe there's a local bank or a credit union that you can walk into, chat with someone, ask questions real time, and apply for a credit card with that local branch. My first credit card was with Capital One, and this card I'll never ever cancel. It has no annual fee, but even if it did, I still wouldn't cancel it. My credit score fluctuates between 750 and 780s, but this Capital One credit card is responsible for 143 months of on-time payment history. Payment history makes up 35% of your credit score. So again, stay organized, know your statement due date and your statement close date. Rule 2, automate wherever possible. One of my favorite books is The Automatic Millionaire by David Bach. The book's premise is you need an automatic system so you can't fail. Relating this to credit cards, in my opinion, means setting up automatic payments to pay your statement balance at the due date. Would it be helpful if I shared what I do after getting a new credit card? Drop a key emoji down in the comments if you'd like to see me chat about that. When it comes to my paycheck, I make sure I automatically have my 401k, my HSA, my insurances, as well as my IRA come directly out of my pay automatically. I did a live stream with Joe from the YouTube channel called Credit Connection, where I went into so many more details about this. So be sure to check out that live stream after this video. Rule number 3, run your personal finances like a Fortune 500 organization. This is the foundation to a few more rules I'll lay out here in a few more moments. But overall, what I mean is everything that you do needs to clearly have a why and also a return on your investment or your time. Rule number 4, pay yourself first. I alluded to this in rule number 2. But personally, I work a regular 9-to-5 job. I've been working professionally for at least the past 10 years. And when I graduated, I immediately started with a 10% pre-tax allotment to my 401k. Every year since graduating, I've increased that allotment 1% year over year. So now today, I have 20% of my income going into my 401k at work. This is definitely not investment advice, but I have approximately 70% of my investment portfolio in a low-cost mutual fund, stock ticker FXAIX. When I say low cost, I mean to say that it charges me 15 cents per $1,000 I have invested in that mutual fund. So to me, worthwhile to get exposure to all of the large organizations in the Fortune 500. Rule number 5, do not pay interest. My exception to this rule is if you're paying a mortgage. I've never paid a single penny in credit card interest. And ultimately, this goes back to rule number 2, automating my payments. Note that I actually am currently breaking this rule as I do have an auto loan. However, I'm aggressively paying down that loan over a 3-year time period. So pretty soon, I won't be breaking my own rule here. I plan to have this vehicle for at least the next 5 to 8 years. Rule number 6, leverage 0% APR offers to the fullest. Do you have any services that you pay for monthly, but if you switch to annually, maybe you get a little bit of a discount? It's time to find out. My auto insurance, for example, I get a 5% discount if I pay the full amount at the beginning of each year instead of doing the monthly payments. This leads me right into rule number 7. Shop your services regularly. Every 6 months to a year, you should be calling your insurance companies or any sort of regular payments that you have on a month-to-month basis and asking for loyalty discounts. Call your internet provider and definitely shop for different rates on auto, home, renter's insurance, or any other types of insurances you may be paying for. These are things you're not locked into a company just because you've had them for the prior year. You have no obligation to them. Shop these services regularly. Rule number 8, don't be afraid to downgrade or cancel. If credit cards no longer make sense for your lifestyle, then downgrade them. I'm personally planning to keep the first 10 credit cards I received in my journey. The reason for this is each of those cards have a path to a no annual fee credit card option. Going back to rule 7, don't be afraid to cancel some of the services that don't make sense for you. Shoot, I guess this statement also applies to credit cards too. Y'all know I've been canceling cards with annual fees and without annual fees for the past few weeks now. Here's a list of the cards I've cut so far in 2024. I've gotten rid of the Chase Inc. Business Premier, the Citi Strata Premier, the Discover It credit card, my checking account with Alliant Federal Credit Union, my Citi Custom Cash credit card, a checking account with First Tech Credit Union, my Chase Amazon Visa Signature card, my Charles Schwab checking account and online brokerage account, my Chase United Mileage credit card that had no annual fee, and lastly, my Chime checking account. Those all got the boot this year. Actually, these past few weeks. So again, rule number 8 is don't be afraid to downgrade or cancel things that don't make sense in your life. Rule 9, maximize your purchases. Maximize rewards on every purchase you make. Point stacking is the single best thing you can do if you're not currently working on a sign-up bonus for a new credit card or a retention offer on a card you've maybe had for a number of years. Earlier this year, I was shopping cell phone plans and I had a Chase offer on my account for 35% cash back up to $30. So I added the offer to my Chase card. Then I went over to Rakuten, who was offering $20 of membership rewards points back. So for my annual fee on my cell phone plan, I got $30 off, and I also got Chase Ultimate Rewards points and Amex membership rewards points. Maximize your rewards on every single purchase you're going to make. Just like a vehicle, you need tune-ups regularly. So this is rule number 10. Tune up regularly. In Fortune 500 companies, they revisit their annual operating plan and strategic plan year over year, and sometimes more often than that. You should be doing the same exact thing with your personal finances and your budget. I'm so appreciative of you watching this video. Please let me know down in the comments which of these was your favorite rule, and am I missing any rules? Let's talk about it.